3, 2, and we are live. What's going on, everybody? Welcome back to Wolf. It's good to see all of you here. It is me and Thomas coming at you for a macro show, talking Bitcoin, talking stocks, ETFs, the crypto industry, all sorts of stuff. I'm excited to do this. We've been doing it on the ETF tracker. We're going to run it on Wolf Bitcoin here and just talk about everything that's going on in these markets. Thomas brought a couple of things to my attention that I had not seen in regards to Ethereum. We focus a lot on Bitcoin, but I'm very interested to hear about what's going on that side of things. And honestly, a bunch of discussion. There's a lot of people up there I forget where they are exactly, but there are a lot of stuff coming out about crypto bills up in Washington and how these clarity acts are coming together. I feel like it's all the talking heads on TV just thinking of struggling of things to say. I don't know what's going on right now. Bitcoin price has been stumbling. And so we're going to talk about all the things. Thomas, my co-host, welcome, dude. It's good to have you. How are you?
Yeah, man, doing good. It's very interesting times at the moment.
Sure.
Just happy to be here, chat some macro, chat some Bitcoin. Let's talk some markets. Just give me a sec while you're doing that. I'll post this out. Make sure we share it around.
Yeah, no problem. Yeah, for everyone who's back at home as well, if you're watching this, definitely take a second and repost the stream as we're getting going here, and give Thomas a follow as well if you guys are looking to keep track of all the markets and stuff like that. Thomas does a great job keeping up with Bitcoin ETF inflows, outflows, and everything that's going on in that front as well. He's got some great resources there. And we're going to talk about all the things today. Bitcoin's sitting around the high 70s-ish. It kind of depends on what time of the day you check where Bitcoin's at right now. 70s. Oh, geez, dude, down 5% in 24 hours. Give me your thoughts, Thomas. I'm curious on where specifically you're focused on in the markets, whether it's the ETFs or you're focused more on Bitcoin. Are there other areas of the market you're focused on right now?
Yeah, for sure. I mean, look, all right. So it's been a wild week. I mean, we have to touch on the metals, but maybe before we do that, I guess as you've led in with Bitcoins, let's go on Bitcoin at 72K right now, and it's like, and everybody's, like you've got Michael Berry out there posting charts about, oh look, this is 2022. He's put out the charts, got the look at the pattern here, look at this is last time, which is kind of
what do you think about that?
Well, first of all, thanks, Michael. I mean that post it at 120K. Now you post it,
right.
Post it when it's down 40%. It's like, I'm not going to really give you credit for that. A lot of the Wolf Bitcoin traders did call the top, like on the top, which is pretty awesome. But I have to say, I think that this is different than last time for a couple of reasons. One, we had just comparing, like, if you compare the tops last cycle and this cycle, because I think that's what people are doing, right? They're going top to bottom, what happened last time. And I think it's important for a little perspective. If you just go back a little history lesson, guys, we topped at 69K last time. It crashed to 16K, but it was an absolute parabolic charge to the 69K region in 2021. It went from 10 to 70 in the space of a year. This is a very different setup, right? There's actually massive support around the kind of region we're in right now, because we had the Trump pump post in late 24. We saw a pump from 70 to, and we got up and we hit that 120K, 124, I think is about the top, and now crashed back down. But a little perspective, right? Before this kind of pump, Bitcoin actually chopped sideways in this sort of 60K region for a year and a half, right? So there's a ton of support. There's a ton of, the traders call like resistance at this kind of level, So I just think like, yeah, I'm not calling the bottom here necessarily, but I'm also like, I don't necessarily see this carve, I don't see Bitcoin just slicing through down to 30K immediately, like kind of Michael Berry is calling for essentially with his charts, which is kind of just a bit lazy analysis.
Yeah, well, maybe his investors have a little bit to do. He called it, he closes his fund, he goes all in, makes a bunch of noise. It would have been epic if the market just tanked right after. You would have had another moment of like, oh my God, this guy is the oracle. But here we are. It's kind of like trending. It's like a slow bleed, It's frustrating.
Yeah,
for everyone.
for sure. Also, but it's one of those things like, put your short on, and we'll respect it. If you sort of look at the chart after the fact, it's like, I mean, there's a bunch of like I will say, I mean, in relation to shorts, if you are bearish on Bitcoin, the alts are really where the opportunities are for shorts, because some of them have been absolutely buried. Like, the momentum is terrible, but at the same time, they're kind of still elevated in terms of where we are historically. Like, Ripple is still trading at $1.47. It's
on here.
Yeah, like look at its long-term chart. Like, go
5 years
go
or how long?
Yeah,
5
yeah,
years?
go 5 years.
Oh boy.
Oh
wow.
So you can kind of, like, if you're bearish on crypto, right? This is the asset to be bearish on. Like, this is the kind of thing that makes you go, look at that long vertical pump, sort of around late 24. Like, if you're bearish on Bitcoin, then you're probably saying Ripple's going to drop another, like, XRP is going to drop another 80% here easily.
Yeah, down to like 50 cents. Honestly, a lot of the I mean, there's like literally a cliff. There's like a teeny, you can see this like tiny little like action right here at like, what would this be? This would be like 50% lower from here. And then it's literally a cliff down to 50 cents again.
It's a cliff. It's a total cliff. Actually, if you can bring up the Ethereum chart, I think that's it. Because that is
same 5 years.
Yeah, that.
Oh my god! What?
First of all, it's disgusting, right? So if you put your money in a bank account over 5 years, you probably would have earned more interest. Oh. But in particular, like, dude, just imagine what this chart is going to look like in May, because it topped in sort of April 21 at like that 5K region, and it's looking at being down in 3 months' time. It's going to be down 60% over 5 years, right? It's and this is where we're going to go test the true believers, right? Like, who still believes in the asset class? I'm not sure. I mean, we saw Vitalik is posting. Well, first of all, he's selling, right? He's selling Ethereum right now, and that's not necessarily a good sign.
Tell me about this a little bit. Wait, so hold on. So Vitalik Buterin, the founder of Ethereum, is selling ETH. What's going on?
Yeah. Well, because it's all his wallets are publicly tracked. So it's all like, people are posting about on X, right? Like, he sold I think $5 million, $6 million worth of ETH in the last week, and the interesting thing is that how this affects the market, because it's like a huge impact, even though it's not the $5 million worth of ETH, it's the signal that it sends. So ETH has massively underperformed. Even Bitcoin is absolutely taken a dump over the last week, but Ethereum is down and added 10% on top. So Bitcoin is down 18% over last week. Ethereum's down 28%. So it's losing ground even to Bitcoin. And part of this has got to be because Vitalik is selling, and traders can see it. It's a public, like, it's an open wallet, right? It's publicly, these addresses are publicly available, so people can see him sending his coins to the exchange. Meanwhile, he's put out this like blog article essentially saying that the whole scaling model for Ethereum, the whole planned scaling model of using these layer 2s to kind of scale transactions, he's basically saying it's bust, right? So, which is, I mean, can you imagine if you're like Polygon or one of the many layer 2s, and you've like raised VC funding for layer 2 Ethereum, like, this is the model going for, and then it's like actually Vitalik coming in and be like, no, this is a whole big giant mistake, essentially. I mean, if that's what we're that's essentially what he's saying. So, I mean, to be fair, after 5 years of the market doing nothing, going backwards, getting crushed. If you don't admit it, you've made mistakes, then you're probably not being honest with yourself as well. But it's a fascinating dynamic. Actually, we were just chatting about ETH before, the that ETQ, was it?
Yeah. That's an interesting one here. This is on. By the way, real quick, just right before you do, I know we're working with Rex Shares, just to put this out, just because the public. But let me pull this up real quick. So this is ETQ, but I do want to say for Rex Shares, there's a link down below the stream if you guys are watching to find out more information about this. I just have to make sure we get this in, just because it's just for specific types of assets, of course. So an investor should carefully consider a fund's investment objective, risks, charges, expenses before investing. The fund's prospectus and summary prospectus contains this and other info about Rex Shares. And if you want to obtain a fund's prospectus and summary prospectus, visit the website at rexshares.com. A fund's prospectus and summary prospectus should be read carefully before investing. Obviously, we're super excited to be working with Rex Shares, one of our longest running clients. Yes, tell me about this one a little bit. So ETQ.
Yeah. Well, look, 2x short Ethereum. It's up 80% this year, right? So that's
really interesting one right here.
It's really, well, look, it's really interesting. One, if you're extremely bearish ETH, and two, I think there's a lot of people in a position right now where they're holding Bitcoin, but they don't necessarily want to, or they could be holding ETH, but more specifically, they're probably holding Bitcoin, and they're probably still in a lot of profit, actually. Like if you're I'm talking about long-term holders. Yes, if you bought in last year, you're definitely not in profit. But I'm talking about long-term Bitcoin holders, and there's a sort of a niche of category of investors that are heavily long Bitcoin, but they're feeling bearish in the market. And the problem is that if you sell your Bitcoin, you're going to take these sort of capital gains tax consequences of selling.
Right.
In most jurisdictions, it depends on where you live and all that stuff, of course. But for the typical investor, it's pretty common that. So you're stuck in this dilemma where you hold Bitcoin, you want to be holding Bitcoin long term, but you're also bearish short term, but you can't really sell it because if you sell it, you're going to be taking a 20% or more tax hit on top of it. And it's a kind of an interesting, like this kind of say short Ethereum vehicle is kind of an interesting hedge because you can go, you're holding your Bitcoin, you're shorting Ethereum, and at least you're hedging yourself in some sense. The risk, of course, is that Ethereum pops and Bitcoin doesn't, or there's risk, but it's kind of an interesting hedge. And I do think if you look at, I don't know if we can pull this up, but the Bitcoin, the ETH, or the ETH chart priced in Bitcoin, this has been on a long-term trend down for ever since Ethereum moved to proof of stake. This would be late 2022, and at the time it was about 0.07. The ETH BTC chart was, and now it's at about 0.03. So ETH has lost about 65% of its value to Bitcoin. But what's interesting is that it had a map. Yeah. What's interesting is that it went from 0.0 to all the way down to about half of where it is now, like the 0.015 type region. And then it had a big spike last year when Tom Lee came in and all these kind of Ethereum, essentially like the treasury companies came in. There's a lot of, they bought up a ton of the Ethereum supply and really pumped Ethereum last year. So ETH had this like 3x where it went from sort of the 1800
I thought it was sharing.
region.
My bad. I thought I was sharing the screen.
Yeah, so if you can zoom out on here, it gets quite interesting to look at.
It's the weekly chart.
Yes, so you see how it's been on a massive downtrend for years, but then we had this pump last year.
Yep.
Yeah, so there's your pump. But if you ignore the pump for a second, because you can explain the pump. The pump came from this specific situation Tom Lee decided he was going to buy up these bags of these Ethereum holders, provide some exit liquidity for the Ethereum holders.
Basically, it ended up being that, didn't it?
And then if you ignore that little pump, what you're witnessing is a massive multi-year, 4-year downtrend. And the thing is like, it looks like it's going back to where it was late last year, which is in that sort of 0.015. It's about half, like, honestly. And it depends on that. That means, you know, in other words, if that ratio would return to where it was last year and say Bitcoin stayed where it is, Bitcoin's at 72K, ETH is at 1K. That's the kind of implication we're talking about here. Now, obviously the Bitcoin price can move, right? So you might have a situation where Bitcoin is at 60K and then ETH is at $800. Or maybe Bitcoin rises back up to 100K and ETH is sitting, you know, it's still okay. ETH is sitting at like 1600. But that's the kind of logical, that's the logical extension of if ETH continues to ride this downtrend, which nothing is guaranteed, but it's a long trend. Like, this is a trend we're not talking about a 3-week momentum thing. This is like a 4-year trend. And you know, I will say it's probably got some support at that sort of 0.0, like that 1.5 region, because if you go back and look at, like, heck, even say 2019, you go back and look over the sort of 8 years of history, that's kind of where it bottomed around back then. And so, you know, like, that's where it bounced last time. Yeah. Will it, like, that's, you know, I'd say that might be where it bottoms, but, you know, I think that's where it's heading, and potentially lower. I mean, honestly, when you look at some of these other, like, if you look at the Cardano chart, it's making new lows basically every day against Bitcoin. Like, and even when see if you can price that in Bitcoin. That's where it gets quite interesting.
Oh, on the wrong tab. All right.
Yeah. So you can see, right, this is just one long trend down, and it's really hitting
rough.
Yeah. It's down. We're talking like it's. I mean, first of all, it's down. Oh, well, first of all, it's down 90% in dollar terms from its peak, but in Bitcoin terms, it's down even more than that, because actually Bitcoin is doubled from when it was at its peak. So it's like down 95% from its peak.
It's terrible.
And it kind of makes sense because, you know, who's using the Cardano network? Nobody. So that kind of like makes perfect sense. But it's interesting to see. What's happened to Cardano is my mental model kind of for Ethereum. But we'll you know, like this is what we'll see. Also, I wanted to talk to you, Kay, because I think like a couple of other, you know, broader macro stuff that's been happening, right? That's like super interesting. Is just, I mean, holy hell, silver had like a
oh my god,
like
dude, yeah,
10 standard deviation event. It went down 28% last Friday. Gold went down 15%. Think about, okay, put this in perspective. So gold has been around forever, but the times when gold falls 15% in one day, I mean, all right, so look at the last 100 years of history. So in other words, we've got 100 years of history. You got 36,000 days, essentially, you know, 365 days, year, 100 years, 36,000 days. There might be like 5 days in those 36,000 where you had a bigger move than Friday. It was like a 1 in 20,000 type event. It was absolutely wild, the level of volatility that you're seeing in these macro assets. And you have to wonder, kind of what are the implications here, I do think that part of the selling and stuff that's happening in Bitcoin is that you're seeing like banks and hedge funds, they've been taken to the woodshed. Like some of these guys, they've had these long positions in these assets. They get slaughtered, they get murdered on a move like that because they just none of their models predicted. You know, they've got these value at risk models and they've got these, I can take this much leverage and, you know, 99% of the time it's only going to move by this much. And, you know, all of their models just do not account for a 15% move in gold. So if you're someone that got caught on the wrong side of that move in a leveraged position, you get absolutely wiped out. And then the problem is that this is the kind of thing where their books get shut down. They have to return funds back to capital, the stuff you have. I think what we're seeing is you have a move like that, and then you get more forced selling that comes as a result of it. And this is particularly probably what's happened in the hurting Bitcoin as well. I think Bitcoin has been, you know, it's kind of painful because Bitcoin seems to be having this like negative correlation to every kind of, or it's positive correlation, I should say. It's got a positive correlation to every crash, but not every pump, right? It's in this terrible dynamic. But you have, something bad happens like gold crash. Oh, that's bad for Bitcoin. Oh, something like happens like an absolute SaaS apocalypse, which we should talk about. The software companies just being absolutely decimated. Oh, that's bad for Bitcoin. And even like last night or yesterday, when you've got then the AI miners had a bit of a pullback. Iron down 17%. That's really interesting. And you know, all of the AI players got hit, right? Like, you know, TerraWolf.
They did.
They all did. And so you're in this situation where Bitcoin seems to get tagged on every one of these events along the way. But you know, we're in this like wild time, I think, with gold because people it's just mass uncertainty, massive uncertainty. And it comes from the fact that AI is changing the world, or at least people think it is, right? So you've got all these models for all these software companies where these businesses that are like, on the one hand, they're just printing money. They're such great businesses historically. Like I'm talking for a decade plus. And they're growing and they're minting money and they're these software products and it looks like they've got a moat and everything is great. And then all of a sudden, but the problem is that they're trading on these massive multiples. Like just to give you an example, Duolingo, this learning application, which, you know, is growing 40% a year. Like even last year, it's growing 40% a year.
I tweeted about Duolingo today. That's actually crazy.
Yeah, right.
That up.
Yeah, right. So it's a company that it's got 50 million, like it's got, you know, 50 million plus users. It's growing at 40% a year. It's never made more money, and it's like it is making so much money.
Yeah,
and the stock is down 80%.
I know, dude. I tweeted about this today. I was like, what?
Yeah, that's why I didn't realize you even tweeted about it. That's hilarious. But it's part of the software story because the thing is you've got a company like Duolingo. This is the perfect example of people going, yeah, you've got an amazing business, but it is so ripe for disruption because now, and the big, I think, to be fair, there might be some truth to it. See, because the Duolingo, you call it Duolingo, but even take them out of it, just call it like the software bulls will be like, oh, what, you're going to vibe code your way to, like, you're going to replace this. Like, you kind of laugh at you in it. Like, they think it's a dumb idea. But the point isn't like, you know, Kate, are you and I going to use AI to replace your Duolingo? No, because as good as the AI is, there's more involved. But the point is, what if Google decides they're going to get into the learning game, and now they just reduce the friction and the costs of building out a learning app? And by the way, AI means that instead of needing to apply 500 software engineers to this problem, they can go to 10 software engineers plus AI and build me an awesome replacement for them. And they've got the distribution, and suddenly all of these individual fields, which looked like they had huge moats because it would take so much effort to build up, go, actually, if you've got really great engineers plus AI and distribution, the competition is wide open. Like CRMs, that's another one, right? For like Salesforce have been crushing it for decades. But Google can see that. Isn't there a massive opportunity for a lot of money to be made in CRMs? Of course there is. The problem is like, it's not easy. But if you have a super intelligent AI that can build software, 50 times easier than software could be built 5 years ago at 2% of the cost, and you combine it with the distribution networks of the big tech monopoly, is ripe for competition. You're seeing this with Atlassian. So, I mean, everybody uses the ticker is Team and Team software, and it's another one, right? Their stock is down 80%. Everyone uses Jira and Confluence and all that stuff, and you know they've got a great product because their users don't even enjoy doing it, but they do it anyway because the product is so good. And so they've crushed it. They've built this amazing business, but then it's ripe for disruption, potentially in a way it never has been, because big software players can use AI to, well, theoretically, at least that's the narrative, or at least more importantly, it's the uncertainty, right? You can go, because suddenly when you're trying to value these businesses, you're trying to model out 25 years of cash flows, right? That's how you value the life of a business. You can go, yeah, I know you guys are going to make money over the next 4 years. Like, nobody's really questioning that. Yeah. But the question is, are these software products going to be used from 2030 to 2050? Like, that's wildly uncertain now. So yeah, nobody thinks like Duolingo is crushing it. And are they going to crush it again next year? I don't think anybody would question that. Yeah. But with AI coming, like, is this the kind of thing where they crush it, and then they actually get replaced? Yeah. And there's plenty of historical precedent for this. The most profitable year in the history of the Blockbuster franchise was its final year. Like, wow. Blockbuster was an enormously successful company, and its most profitable, it went from record profits to actually we're dead. Wow. In the space of a year. Interesting. In the space of a year, because of a technological shift meant that, it was replaced. And so the point is that there are historical precedents to it. Now, do I think that every software company is going to get destroyed? No, I don't. But also, it's like, really hard to predict, right? Like, it's really hard to predict. There's going to be like some of these things are absolute fire sale prices. So it's like extremely kind of interesting to pick it. And if you can figure out which ones have the proprietary data that can't be easily replaced, then I think that's where you have an edge. So I do think that's where it comes to some of these software services. Like, I do think that people say the Duolingo one, going back there, when people look at that, they go, hey, they've got all of this historical data. You can go build an app, but you don't have the data that they have, or of the 100 million users. And that's why it's actually much harder to, like, you're starting from behind, and it's not about how easily that's the bull case. It's like, it's not about how easily you can build the software. You just don't have the information that you need. So I do think that proprietary data is what's going to separate the software companies that get eliminated versus the software companies that actually keep crushing it. And of course, the other thing is network effects. I mean, like, take X, right? I mean, it is trivial. Well, admittedly, some of the back-end infrastructure to scale to that many users is not trivial. But the point is that, like, a message sharing app is not what makes it, Twitter or X valuable. It's the network there. It's the fact that there's been a million Twitter clones, but it's hard to get people to move from one network to another. So network effects is still going to be hugely important in software. But what companies have network effects? Like, there are network effects in certain things, but it's a spectrum. Like, it's like weaker network effects. Like, the businesses are used to using it and it's a bit sticky, but how sticky is it? Like something like Jira software. Because the problem is, of course, is that everybody's extremely used to using like their Google stack. It's not very difficult to add one more thing to the bundle. Oh, I'm used to using this. I'll just add one more thing. I'll add one more thing. And we saw that, right, where, another example, of course, is like, Zoom makes money, but also it wasn't that hard for Microsoft to add Teams and take a huge proportion of the market share. Google Hangouts take a decent proportion of the market share. And like, that's a sort of another classic example of, got this software product, but like, can it defend itself? And Zoom is an interesting one historically, just because it also gets back to the whole point of valuations. I mean, Zoom is down 85% from where it was in the peak COVID era, but it's never made more, like it's compounding its revenue and profits at an enormous, like, it's so hilarious. If you looked at a profit chart of Zoom, it's like an exponential curve, but at the same time, it's not exponential, but it's growing anyway. And yet at the same time, the stock price is just completely cratered because it just had a crazy valuation. So I think that's part of the story, where you've got these software companies that they're just like, hey, they used to trade at really high valuations. And now,
dude, I'm looking at the Zoom chart right now. I was looking at I didn't realize I was not on the 5-year chart. I was looking at the year. I was like, oh, it's not too bad. Like 1 year, not too bad. Then 5 year, I was like, oh, I see.
Yes,
oh my gosh.
But if you looked at its, not that it's that easy to pick it up, but if you had a way of looking at its revenue, it's made, like, it's unquestionably a much better company in terms of its profit metrics in the last 5 years. It's not even close, but it just had a crazy valuation during the COVID period.
I need to upgrade if I'm going to get more information here. It looks like I can.
Well, look, in any case, I think that the concern, if you were you're looking at these software companies, say, the concern is that maybe they were just frankly expensive to begin with. Like, some of these things have been trading at stupid valuations, arguably, and so if they've gone from 20 times sales to 10 times sales, or 12 to 6, it's like, actually still not that cheap, So I think that is part of the story. But unfortunately for Bitcoin, going back there, circling back, it just seems to get caught up in these correlations, right? So you have the tech story getting smashed, and it's like, oh, is Bitcoin a tech asset? Maybe it is. The market doesn't really know how to, still 15 years in, 16 years in, still doesn't really know what to think about Bitcoin, like what bucket to put it in. It just tends to get tagged as, it's software, it's tech, maybe it's gold, but it's not really gold. And it occasionally, like, we've seen flickers historically, we've seen moments in time where it's acted like gold.
It's just Bitcoin versus gold here. I believe this is the right chart.
Yeah, it's a brutal chart, man. I mean, that kind of shows. I mean, part of that story is, of course, of gold is just absolutely roofed.
Yeah, it has. You can see this crazy, dude.
Yeah, that's a brutal, and especially because you have to say, as a Bitcoin bull, the long-term trend, the thesis was, of course, is that Bitcoin was demonetizing gold. Actually, like, gold has got this many thousands of years history as being the money. And in fact, you talk to any gold bug, right? They have the same thesis as a Bitcoin bull. It's like the same story. Anybody can explain this ultimate underlying thesis about the US federal government having $39 trillion of debt, that essentially the debt to GDP ratio is way too high, and they're going to have to print money, and there's a debasing of the currency, and it's going to flow into it's going to flow into these risk assets. Landy points out and says, yeah, it'll bounce back versus gold. I think so. I mean, I tend to think so as well. But, you know, we also have to be honest with ourselves and admit, like, the thesis is being challenged, right? And I do think that's really important, where, you know, Michael Saylor is out here over the last 5 years saying gold is a dead asset. And he was saying that when gold was at 1,600, now it's at 5,000.
Yeah, my friend Dom tweeted this about he posted. Oh, here it is. Check this out. Oh, sorry, I thought I was sharing screen. If Saylor bought gold instead of Bitcoin, his reserve would be $100 billion instead of $55 billion. P&L would be 76% compared to currently 0%. I thought this is a very interesting post.
Yeah, I mean, look, the one thing I'll say about this, which is slightly disingenuous, is that, and people also say this when people talk about Saylor's quote unquote average price, it completely misses the point that Saylor took all the cash he had, like every dollar he has, and bought it 10K.
That's
right?
true.
And then at that point, he doesn't have any more money. But what he did have was the ability to raise capital. And he kept raising capital, which is other people's money, and investing it in Bitcoin. So he was able to spin a narrative and attract capital and invest that money into Bitcoin. But when people say, oh, Saylor's price is at, you know, 77K because he bought a whole bunch of money at 120K, it's like, well, did he? I mean, in the sense of, is that Saylor's money when he was buying at 120K or 100K? Because Saylor was completely tapped out. Saylor was selling shares of MicroStrategy. He was giving you paper, and he was giving people paper, and in return, they were giving him their money, and he was buying Bitcoin with that money. And so it's a bit ridiculous to say, oh, Saylor's price is blah. It's like, well, no, that's the capital he's invested, but he was also selling shares that were 5 times the price they currently are now.
Interesting.
So Saylor doesn't care about the average price of MicroStrategy. By design, the price is going to go up. He's not using his money because he already used his money. Like, he already bought. He didn't have any more.
Dude ran out.
Yeah, he ran out 5 years ago. But he's going, oh, I'm going to take other people's money and buy Bitcoin. I'm going to create a vehicle to take other people's money and buy Bitcoin, which is what he has done. And it's true that other people's money, people invested in MicroStrategy over the last year and a half, it's been buying Bitcoin at now a price that's above the current market price. But it's not really, and anyway, I bring this up because the counterfactual, which is like, well, if he did it with gold instead of Bitcoin, look what he would have. Here's the point. He couldn't have done it with gold because he couldn't have raised the money with gold because there was not an exciting story with gold. He had a story.
See. Interesting. Okay.
So there is no counterfactual of, oh, if he put 50, if he put all those billions of dollars into gold, he'd have this much. He never had those billions of dollars to invest, and he never could have. There was no way. The reason why there's no MicroStrategy of gold is because there's nobody that would invest in that. I mean, maybe, and Lanny points out Tom Lee. Yes, that's absolutely right. I mean,
it's funny.
Tom Lee. Well, look,
I had not thought about it like this.
Tom Lee has to be putting my hater's hat on for a second. I think Tom Lee has to be the most useful of useful idiots, and I'm talking about for Ethereum, like for someone like Vitalik, because he just came in and he absolutely pumped. He provided that liquidity for Ethereum, but Ethereum was on a downtrend for years and comes out, I'm just going to be the Michael Saylor of Ethereum, he pumps Ethereum, but he didn't, it's not like he did well out of that. I mean, the reason why Ethereum pumped was because he was buying it. It's like, I mean, have you ever heard the story about the Eggman?
Oh yes, the Eggman comes up in many of our Twitter spaces. Bits of Wealth and a lot of our trading crew is going to love this.
Right. Okay. So there's
but tell the story for people who haven't heard on the stream.
Okay, so there's a guy that's, I mean, look, and I'll give the, I don't have the story in front of me, but I'll give the general gist. So that
Landy knows.
Yes. So the Eggman comes along and he sees futures trading eggs at $3 and he buys 50,000 units of eggs at $3. And then the eggs go to $4. Oh, and he's made a profit. He's made a profit on his eggs. Now he buys another 50,000 units of these eggs because he's making money. Look at the value of his eggs. And then he buys now they're at $6 and he buys another 100,000 units of eggs and they're at $8 and he buys another 500,000 units of eggs and they're at $12 and he's pumped. And look at all of this money that this man has made buying eggs. He's been buying the eggs future. And then he goes to his broker and he says, all right, great. Now I've accumulated 5 million units of these eggs and they're trading at $12. Now's the time to sell. I'm going to sell it all and take all my profits at $12. And then the broker says to him, well, who do I sell it to? You're the Eggman. Because he's the one that's been buying it. He's the one that's pumped it up. So no. Tom Lee is the Ethereum's Eggman. He didn't make money pumping Ethereum. He just bought a ton of Ethereum and pumped the price up. His average is like $4,000. Look, I guess what I would say is Tom Lee is a fascinating case study in how a little bit of charisma and a little bit of bold price calls, right? You go on, if you can get yourself on CNBC, get a funny hairdo, and you can just start calling Ethereum's going to 20,000 end of the year. Ethereum's going to 25,000 end of the year.
Because if someone makes a claim like that, people are like, you have to, I mean, that's what I was thinking when I was like, he has to know something. Like, there's no way you could say these things if you don't know something. Like, you have to know. There's something he knows, but I don't know if I'm not so sure now. I don't know. Annabelle likes the story.
It's so audacious. It's absolutely audacious. But he got, and he's talking to people on CNBC that don't really, these are like journalists or presenters, and they don't really know. They don't really know what's going on, and so they're like, "Oh, really? Is that what do you know? And are you in touch? Are you like talking with like Eric Trump? Like, well, have you got the inside? If you got the inside knowledge here?" And so, basically, bamboozled the public, lost a ton of money for a ton of investors. Very unfortunate, but look, now we're in a look. I guess the question is where to from here, and that's really like, I'll be honest, like, I don't know. It's a really tough spot. I mean, at this point, prices are back down close to where they were at 2024 levels, but we're back sort of close to before that pre-Trump pump. And I think there is going to be a lot of support in this sort of region. I wouldn't at all be shocked to see Bitcoin go from 72 back to that sort of where we were really pre-election, was in that 60 region. But we were there for a year, longer even. And so I kind of can see a period of consolidation support. I don't think it's good to, like, if you're a holder, it's generally not good strategy to watch your bags fall enormously over a week and then panic sell. Like that as a strategy, it's just not a very good one. And so, there's going to be an interesting period of time, but I do think there's probably some support coming. The other thing, by the way, Kate, that we should talk about is there's a new Fed chair that, there's Trump's pick.
Mr. Walsh. I thought it was confirmed. Is it not confirmed?
No, I don't think it's confirmed, but I think that's his pick.
Got it.
So I also wonder to the extent to which this is the markets timing something, sniffing something out here. And I don't know, because he's an interesting character. He's actually a really a smart guy. He's conservative. He's not.
There's a not Kevin Warsh account already on Twitter.
Right. Yeah. Well, that makes sense. But he's a guy that he's also very conflicting, because on the one hand, he's making it seem like, yes, he does want to have lower interest rates, which, I mean, there's a thought that he's a part of Trump's sort of post-election administration team. Like, he's part of his team. Trump clearly wants lower interest rates. So there is a thought that, that's going to be, I guess, bullish. He wants lower interest rates. But the other thing that Kevin, if you go back and listen to his interviews or look at his history, he's also very much of the ilk of protect the dollar. This is a man that actually resigned from his Federal Reserve seat originally back like 15 years ago in protest when they tried to do QE2. So to put it in perspective, he supported QE1 during the global financial crisis. But then, so he's like, in crisis, yes, we'll use these extreme measures. But then again, by the time he got to QE2, QE, and the post ones, he didn't support it. He was like, hey, we're not in an extreme situation here. We shouldn't be doing this. And, QE, for people that just don't necessarily follow it, that's where the central bank is buying treasury bills, which is, in other words, and where do they get the money to buy the treasury bills? The central bank just prints it out of thin air. That's it's money printing. That's what it is.
The printer go burr. So that's where the meme comes from.
The printer go burr. That's exactly what it is. Now, the point is that this is a guy that actually resigned over people wanting to go burr. Like, that's what it was. He was like, he fought it. And so there is a thought that actually maybe he won't be so good for risk assets, because maybe on the one hand, he does talk about lowering interest rates, but he also, on the other end of the monetary policy, it would be going back against everything he's ever, all his history. If, it really, frankly, like, if you think QE is coming, he's not a pick. It's just not, like, it's everything against what he believes in.
Interesting. Laney said something about this recently. He said I think it was Laney who said there's a couple other people he would have thought might be a better pick for what's about to come. That's interesting you say that.
Well, I don't know. I mean, so better is an interesting one. I mean,
I don't know if he used the word better, but.
Well, I guess my point is, like, what's your perspective here? Yeah. I mean, as a Bitcoin holder, part of me is like, well, put someone in there that's going to, pump this thing up. Of course. I mean, I'd be lying if I didn't, have that, that financial incentive. But I also can say, as someone that's more of just an objective, like, what's good for the economy, what's good for the people of the world, frankly, he has like more of a sound. I kind of actually respect his position on a lot of this stuff. Like, it's not good. It's not good. A sort of QE. Yeah, thank you, Laney. You clarified your position. So it's not good for the world, for us, for the US to be doing these, QE 5, 6, 7 when there's not even a wartime, there's not even a financial crisis. But the point is that, it's not bullish, right? If he's going to be turning off the taps of any kind of potential QE, which is the logical implication, if you think about this, that's also just got to put like a little, just a pause, or at least it reduces some of the, maybe some of the excitement. Although I will say, he has said in the, if you go back, and there's a really good podcast, that where he was on, and he talks about this, where I forget the name of the podcast, but it's like Uncommon Ideas or something like that. But he talks about how he did support QE during the global financial crisis, and he did support it during the COVID pandemic. So he describes himself as like a really pragmatic monetary policy. policy person, where it's like, yeah, in a crisis, in other words, in a crisis, we're going to print.
Right.
But hey, if things are humming along and it's like sort of normal type economic activity, that's when actually you want to take the Federal Reserve, and you don't want the Fed's actions to be front page of the newspaper. That's where you want it to be 7th page. That's when you want it to be a footnote. Oh, by the way, they raised by 25 basis points. They cut by 25, but it's not like, in other words, his goal is that not Kevin Walsh account doesn't get to millions of followers on X. His goal is for the Fed to become very boring and background, which is kind of a noble goal in the sense of, I think we would all be better off if that were the case, but not necessarily risk on assets. And that's, it's like, what kind of world do you want to live in? I mean, you look in the last 10, 15 years, yes, Bitcoin is pumped, but at what cost? Look at how much housing prices have gone up. Look at all kind, we do have to think about generations of human beings and the kind of the costs to this kind of inflation that we've experienced. And do we want to inflict that upon everybody going forward? It's not necessarily ideal. Certainly not for the majority of people, because the majority of people don't hold assets. I think so. Landy brings up that he's aligned with the growth objectives of Trump's economic team, and I think that's right. His focus is on. Well, first of all, he brings up in this podcast that, like, he says the budget committee for doing the Congressional Budget Office, they forecast economic growth over the next 10 years at 1.8% per year, which is sounds like a disgustingly low number. But this podcast is from maybe 6 months ago. And his point was, what can we do to get that to 3-4%? And he's very much looking at the past, but not necessarily, it's like learning from the Reagan policies, but also applying it to today. He's a deregulation guy. But some of this doesn't matter, because his point as well is about, let's separate a separation of responsibilities. So he wants the Fed to be less political. He wants the Treasury to be responsible for handling the fiscal situation of the US, and he wants the Fed to be responsible for the monetary policy, and actually a proper separation. And I think also the other big idea he has is, he says that they're linked in a way that actually I haven't heard anybody else say this specifically, because if you look at the last, like when he joined the Federal Reserve originally, US debt was at 30% of debt to GDP. Now it's at well over 100, like 120 or something like that. And his point was, by the Fed doing this QE and buying treasuries, it also encouraged Congress to run a deficit, because they knew they had this buyer here. So he's saying that you had a lack of discipline in Congress and you had a lack of discipline at the central bank, but they caused each other. One caused the other. And he wants to kind of sever that, bring back discipline on the central banking side, and hopefully that helps bring back discipline on the congressional presidential side. But when you think about this stuff, if you take his ideas seriously into their logical conclusion, it's not like it might be sound, rational policy for economic growth, for prosperity of the United States. It's not necessarily bullish for risk on assets, right? It just and so I don't think he's going to be doing anything rash to kind of, because he's a very pragmatic person. He's very much like, we have to do the thing that works. That's why he's a guy that would support, say, he isn't for QE, but then he is under an extreme circumstance. So he's not like a real ideologue. But I do think what that tells you is we're in a situation where he's not going to do anything major, but he might just shift the dial a little bit. He might just shift the dial away from like basically the less QE, discouraging and also just discouraging the kind of excesses that has led to massive bubbles in the past.
Do you think that's
he's only one?
Like that type of character in the Fed chair?
I don't know. I'm not sure if any one man, this comes back to as well your perspective on like great men of history versus mega trends, because I think there's a case to be made that the old saying, nothing can stop this train, which is to say he might have all of the right ideas,
right?
But what do you do when you've got debt at 120% of GDP and you're running a 7% deficit, and you had all of the mandate in the world for Doge to come in and cut? You will never get an opportunity like that. And what did they cut? They cut like a few $1 million of spending, and suddenly it was like the most political thing, to the point where Elon Musk comes in afterwards and says, I can send a man to Mars, no problem, but I can't fix the budget.
That's absurd.
So that's where I go, I'm not sure. I think he's got these ideas about protecting the soundness of the dollar, but ultimately I'm not sure that any one man can do it. And I don't really think that he will succeed. And ultimately, my base case is that we will have some kind of financial crisis in the next few years, and they will print. Like, he might be able to hold off the printing from just sort of normal economic activity. So it might not be, 2016 QE when everything is just going along, but hey, lol, let's just fucking burr anyway to pump some assets. He's probably not going to do that. But what he will probably do is, when the financial crisis comes, he will probably, almost certainly turn on the QE, turn on the printers, and I don't think that anybody can stop that.
Yeah.
So that's just kind of the situation we're in, I think.
Yeah, I can't imagine what we're in. I agree with you there. There at some point it's going to have to be massive printing. It just seems like that's how it's been set up. It's always been like that. Ever since they started doing it this way, like there's no other option. Like at some point, which it's, well, I don't know. It's you have to hold both in the one hand. Like you have one hand where you're like risk assets. Then you got another where you're like, this can't. There has to be some kind of massive correction. Like, which assets do I get into? So you got this fear of like you need to be in the market, but like, what if you get in right before everything's comes crashing down, or what if this has an inverse effect first, or if there's a war first, or enter XYZ. I think a lot of people are sitting there, and that's maybe why they're getting into these 2x lever plays. That's why Rainbed and Plinko and all these like gambling, tokens and gambling games are so big, like on YouTube. Like these gambling YouTubers are making more money than any professional athlete in the world. I mean, it's a crazy world we're in right now.
I guess the last thing I would say on that is, what's interesting is it is possible. In China, they could do it because they have such a top-down control. They could decide that the best thing for an economy is, for example, we're going to let the markets have a proper correction. And they could actually do it because ultimately you got like Xi Jinping at the top. And if he decides that's the right thing to do, he decides the right thing to do. And that's how it's going to be done. But in Russia, they could do it too, because if Putin decides that's what they're going to do, that's what they're going to do. But in a democracy, the question is, are the people ever going to allow that? Because the people will always say, that's my wealth, protect my wealth. And you can, and you, of course, you can always quote unquote protect your wealth by printing. It just has all these other costs associated with it. And so that, like, when you're in a democratic system, you've got all these people that are like setting up for retirement, right? Because it's one thing for a political leader to say to you and I, because they might say, we need to stop the printing, we need to protect the dollar, and it's going to wipe out assets, but we're going to make the economy flourish from here. And you might even be able to sell that story to people that are like in their 20s, because one, they might, or their 30, even their 30s, like, well, you don't, you got a long life ahead of you. You're going to take some pain now, but you're going to have a great economy going forward. You're going to have a great job. Everything's going to work out. But you can't sell that story if you're a 65-year-old and you're retired.
That's right.
All your money is in asset, like So, and of course, because of the demographics, it's a huge proportion of the voting bloc, it's a huge proportion of the population. So they're never going to vote for that, and nor should they, right? Like, if it's not a moral judgment against them. It's just rational behavior about how people operate under different positions. And so, you just in a democratic situation, if there's any kind of crisis, what do people want? Protect my wealth, protect my assets, protect the money. So that's the dynamic.
Wow. Oh my gosh! Wow, that's a very. There's 2 or 3 points you brought up during the stream that I'm gonna have to rethink some things. That's a really interesting way to put it. Also, just to call back to earlier in the conversation in regards to Tom Lee, Landy says the crazier Lee's hair gets, the lower ETH goes. So there he is. If he starts slicking it back, Ethereum will run. So be sure to keep an eye out for that, everybody. If you see that slick back hair from Mr. Tom Lee, something is coming. That's hilarious. I appreciate you, Landy, for coming through, and all the people who are listening in, and in the comments here or in the chat as well. I appreciate everyone for tuning in. And by the way, if you're enjoying the discussion, definitely be sure to repost it, quote tweet it, give Thomas a follow as well. We tagged him right above our faces, and so be sure to give him a follow. If you're watching on YouTube, definitely subscribe. This is interesting, dude. Yeah, you're right. Because at some point they're like, dude, I don't even care. Just make the thing go up. How do we do that? Well, not many options for that. Wow. Well, I wonder where that leaves us, dude. I mean, we got a whole lot of time left in 2026. I'm not sure what people were expecting, like end of year. I think people were excited / like nervous about what to expect. I know they know that midterms is coming up for Trump, and so I think there was like a lingering expectation of like action. You know what I mean? I'm not even sure what the right word is, but
I think there'll be regardless. First of all, it's not going to go like this the whole way through. It's not going to be. It's like, even if we are in a bear market, it's not going to be straight down. It's going to be ups and downs.
Right.
I also think that it's everybody is going to get humbled at some point. So it's going to come like, you think it's you think it's topped, and it's going to go down. You think it's bottomed, and that's when you get a face ripping rally. And I mean, I think that we're going to get especially because this thing can turn on a dime when it comes to policy. And don't forget that there's a midterm election coming, and there's going to be promises made, and there's going to be policies proposed, and we have things in the out there like strategic Bitcoin reserves, and there's different. I just think that this could turn quickly.
Yeah.
So I don't know, but I also I'll be humble enough to admit I don't know how this is going to play out. I mean, yeah. So it's very interesting.
And you should have been in our space earlier. We had a gentleman who was very angry at Landy because Landy wouldn't tell him what was going to happen next, according to his TA. He said it wasn't clear enough of an answer, and that was not okay. They're in this space. Dude, we're just doing what we can. Yeah, Annabelle, Patience, DCA. Honestly, probably some pretty sound advice. Pick the asset.
I think that's
right. Yeah. It ends up being, after all the discussion, that the answer is relatively simple. Kind of. It's like simple in a complicated way. That makes any sense?
Yeah, and I think that it comes back to time horizon, right? Because if you're talking about something that you want to hold and you believe it's going to be much higher in 2030, then Patience, DCA, and you're going to be and don't even really worry about the price. I mean, it's only if you're kind of you're trading or you're in over your skis with leverage, which don't do that maybe. That's when you get stuck with really fretting about the price action. Otherwise, of course, the old method is the best method, which is patience and DCA.
For the majority of people, I definitely agree. If you got the sauce, if you got it like that, if you're like Landy and you can crank up that leverage and do well, you're gonna be doing pretty well. But on the other end, I mean, Landy, while he's a degen trader in some ways, he's also just stacking Bitcoin on the other side of it too. He keeps it simple, like a lot of us here. And yeah, we'll have to see Steve's crystal ball. I love it. No, this is a great stream, Thomas. I think we chat about a good amount of stuff here. Yeah, I'm glad we get to talk about Bitcoin as well. And for everyone back at home, by the way, if there's any specific topics you guys want us to hit on next time, if there's specific stories you'd like to get some comments on, you can always leave them down below in the comments or in the chat as well. We enjoy doing these streams with you. Again, if you're not already following Thomas, he keeps everyone up to date with what's going on in the ETF, the Bitcoin flows, inflows and outflows and all that stuff. So be sure to give him a follow on X. And otherwise, like, I don't know if there's any final comments you want to throw in there, Thomas, but it's been a fun stream, dude.
Yeah, man, good stream. Really enjoyed it. Yeah, looking forward to the next one.
Absolutely. All right, everyone back at home. Thank you all so much for tuning in. We'll see you guys all in the next